the largest network of real estate investor associations and real estate investors in Texas, going back to 2003, with 150,000 members, participants, and attendees. And the Texas REIAs provides resources for Texas real estate investors. And one of the resources we offer is market data, because you need to be a student of the market. You need to know what's going on in the marketplace. And I'm going to share a bunch of data with you right now. So this is the whole high-level overview of the Texas real estate market right now. The average price house of a house in Texas is $424,000. From 1 year ago, it is up 1%. So nothing's happened. It's flat, up 1%. The median price house in Texas is $332,000. From 1 year ago, it is down 1%. It's flat. But if you want one data point, just one data point that's kind of the barometer for what's going on in the marketplace, it would be this number right here in the middle, months of inventory. That's the most important data point, months of inventory. How do you calculate months of inventory? If you took all the houses for sale in the entire MLS and you said, we're not going to add any more. We're just going to take the houses that are currently for sale and we're going to sell them until they're all gone. How long would that last? And the answer, 5.5 months. We have 5.5 months of inventory. Now, let's put that in perspective. And that's also the average amount of time to sell one house. Now, that's average. Some take a lot longer, some take a lot less time, right? That's why they call it the average. But let's put that into perspective. They say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. What kind of a market are we in right now? It's a seller's market. Not much of a seller's market, but it's a seller's market by the pure definition of the seller's market. Now, a year ago, we had 4.8 months of inventory, and a year before that, we had 3-point-something months of inventory. So we used to have a much stronger seller's market, but technically it's still a seller's market. You know, and by the way, I'm not here to try to convince you of anything. These are all data points from the Texas A&M School of Real Estate. We do market updates every month. We've been doing this for years. There's a lot of groups out there that's always trying to convince you of something. The Board of Realtors always says the market's going up, no matter what it's doing. When the market's going up, we'll tell you the market's going up. When the market's going down, we're going to tell you the market's going down. When the market's going sideways, we're going to tell you the market's going sideways. And we just report the data. We give you a little insight, but we're not here to try to convince you of something. Because we have strategies for up markets, down markets, and sideways markets. But a lot of people don't realize technically we're still in a seller's market. Not much, but still a seller's market. So what happened? Let's talk. What's the biggest change in real estate over the last several years? Interest rates. What happened to interest rates? They went up. Okay, let's talk. When interest rates go up, what happens to home prices? Okay, let's do a vote. When interest rates go up, who thinks when interest rates go up, home prices go down? Okay, who thinks when interest rates go up, home prices go up? Okay, you're both right. You're all right. They do both. Now, here's the thing about real estate. Real estate really doesn't care about interest rates. Real estate cares about supply and demand, pure supply and demand. Now, when interest rates go up, houses are less affordable, right? The payments are higher, fewer people can afford them. And when fewer people can afford them, demand goes down. And when demand goes down, that pushes prices down. We got that. But there's an offset. What's the offset? Normally, 2/3 of the houses that you see for sale in the MLS are resale, and 1/3 are new construction. That's normal. Right now it's inverted. Why? Why is it inverted? How come people aren't selling their homes?
Their interest rates are too low.
They got a 3% mortgage and they don't want to give it up. The economy's not bad. Most people have jobs. people should be saying, honey, let's go buy a bigger, nicer house, but they're not. They're saying, honey, we got a 3% mortgage. If we get a bigger house, it's going to be a 6% mortgage. Let's stay where we are. So they're not selling. So yeah, there's less demand. There's also less supply, right? And when you have less demand and you have less supply, what happens? It's flat. That's why the market didn't correct. There's another reason the market didn't correct much. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Pretty obvious. There's another 12 million people, we don't know where they went, but there's a bunch of them here too, and they all need a place to live. And I don't know if you know this, guys, but we are in the middle of anybody know this? Housing shortage. Who's heard this? We have 6 million fewer houses than we need because everybody's got to live somewhere, right? And when you don't have enough houses, what does that do to prices? When there's a shortage of supply, it pushes them up. So we have things pushing down and we have things pushing up. So let's look at the history. 2021, prices went up 18% in 1 year. 2022, prices went up another 10.7% in 1 year. 2023, flat. 2024, flat, except at the end of the year, it went up a little bit. Why did it go up a little bit? What happened at the end of the year? Interest rates went down a little bit, juiced the market up a little bit, but not much. All right, and this year, flat. Okay. Dallas, let's look at Dallas. Average price house in Dallas, 503, down 1%, flat. Median price, 390, down 2%, basically flat. But this is interesting. Dallas has 4.4 months of inventory. This is the hottest real estate market in the state of Texas. Congratulations. And I invest in Austin, Dallas, Houston, and San Antonio, so I love them all. But this is the number one market. And there's something interesting about Dallas. I don't know why this is the case. It has always been the case. Dallas has always been the bellwether of Texas. It's always the first mover. I don't know why. There's certain things that move first. Like I'll give you an example. Condominiums. We call condominiums the canary in the coal mine. When the condo market goes, it's the first thing to go and everything follows. When the condo market comes back, it's the last thing to come back. If condos are strong, everything's strong. Right? It's the canary in the coal mine. Another bellwether is Dallas. Dallas is the first mover. I don't know why, some combination of the mix of economy or whatever it is. But Dallas is also right now the hottest market in Texas, only 4.4 months of inventory. It's actually kind of a hot-ish seller market. Prices went up 20% 2021, 15% more in 2022. 2023, basically up 1% flat. 2024, up 2% flat. Leases up a little bit, 3% more listings. Lease prices up a little bit, up 4%. Why are they up? When the leases are up, what does that mean about the apartment buildings? Are they full or are they empty? They're full. So commercial real estate's taking a little bit of a hit because interest rates went down, cap rates went down, cap rates went down with the interest rates. And then interest rates went up and cap rates went up and prices went down. So commercial apartment buildings are struggling a little bit. They should be struggling a lot a bit. But in Texas, we have a big thing going for us. They're full, right? And the reason they're full is because everybody's moving from, where'd you come from? Los Angeles, right? So you and 499,000 of your buddies, moved here. Thank you. Yeah, there you go, 501,000. There was 3. So thank you. We're glad to have you. Did you find a place to live? I hope so, right? Because there's not much available. So yeah, I'm not going to go through all the cities, but I'll give you some market drivers. So what's driving the market? Well, let's talk about the market drivers. The economy. I'm going to put this up in a different form. The economy. Let's talk about the economy. Real estate doesn't care about the economy directly. It cares a little bit indirectly. So let's talk about the economy. Consumer confidence, what is that? If something's yellow, it's flat, green is up, red is down, pushing prices up, down, or flat. Right now, consumer confidence is right in the middle. Interestingly, it's measured on a 0 to 200 scale. Anything over 100, people are confident. Anything under 100, people are scared. We're at 97, right in the middle. So it's kind of right in the middle. Unemployment, Texas is good. We got jobs. So that's doing pretty well. Job growth, Texas is also pretty good. Stock market doesn't affect real estate other than indirectly if people had money in their 401k, they feel wealthier, right? So they're a little more likely to go buy real estate. Business growth, again, Texas is good. So overall, the economy is flat to up here in Texas. Housing affordability, interest rates. Interest rates are higher, right? Interest rates are higher, and that's pushing prices down. So that's a down. House price trajectory is flat, so that's pushing sideways. What about supply? Active listings is flat. Months of inventory right in the middle. You know, technically it's a seller's market, not much, 5.5, but technically right in the middle. Housing permits trajectory, this is a problem. We're not building enough houses, and not enough people are starting houses, and lending is more expensive, loans are more complicated, and contractors are dying, and for a lot of reasons, we're not gonna have enough houses. And a part of it comes down to this one, construction labor growth. This is a big problem. Contractors are dying. The average general contractor is 58 years old, and that number keeps going up, and they're not getting replaced. So if you have a teenager, here's some advice. Don't send them to college. Buy them a hammer. Seriously. Seriously. I know plumbers making $1 million a year. My parents went to college. I went to college. I have a 16-year-old boy. I want the world for his future. I don't care if he goes to college. I think there's plenty of things you can do to become very successful and make a lot of money that may not include college. So yeah, buy your kids a hammer and tell them they can make, you can get $250,000 in student debt, you know, study something you probably don't enjoy, get a crappy job working for a jerk, or you can swing a hammer and make $1 million a year, work for yourself and go on vacation when you want to. Housing demand, closed sales trajectory, flat, right? Pending sales trajectory, flat. But the biggest bump on the whole page should be this. This bullet should be this big. It should be. Migration. That affects the number more than anything else. Migration is the ratio of people moving in versus people moving out. And we have huge migration here in Texas. People are moving in to Texas. And that's really a big deal, because we don't have enough apartments, we don't have enough houses, we're not building enough houses, and as long as there's a housing shortage, that's upward pressure on pricing, okay? So that's a big deal. And then, like, I don't know, wild cards, what's gonna happen with laws, tariffs, immigration, whatever. So I'll give you our forecast. So let me show you our forecast. And I do want to say something about the forecast. Again, the data comes from the Texas A&M School of Real Estate and many online sources. We're not here to try to convince you of something. There are plenty of ways to make money in up markets, down markets, and sideways markets. So we just want to tell you where we are, and so you can use appropriate strategies and investing planning. You know, sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It is never easy to buy and easy to sell. But I will say something about the market we're in. 5.5 months of inventory is right in the middle. It's right between buyer's market, seller's market. Technically a seller, but it's really kind of right in the middle. You know, people ask me, what's the best strategy to use right now? My answer is yes. In this market, all of the strategies work. It's not that hard to buy. It's not that hard to sell. And what that means for real estate investors, it's a great time to be a real estate investor. So here's our forecast. If you were looking for some amazing correction, that was probably it, and there wasn't much to it. Interest rates will probably decrease again at the end of this year and somewhat next year. That's what the Fed and everybody is telling us. Interest rates will probably drop by down to the point of mortgages being 5.5%, 6% by early 2026. With some small decreases in interest rates, it'll juice the market, only a little. And that means that prices will probably bottom out, will probably be up, I don't know, 1 to 2% since a year ago, and 1 to 3% since 2025. We expect, again, 1 to 2% by the end of the year. So the point of all of this is the market's flat. It's not going to do much other than kind of keep bouncing along forward. There's nothing big that's going to change this thing in a big way from a buyer's market, a seller's market, to anything at all. So we don't expect any big changes for the next 6 to 12 months. And I know that sounds kind of boring, but that's the forecast. And I'll tell you something else about the forecast. I don't make the forecast. This month I'm just reporting the forecast. Usually somebody else reports the forecast. But we have been giving a forecast for 20 years. And I'm going to tell you, we've always been spot on. And it's not because we're geniuses, not at all. It's because it's not that hard. Predicting the economy is hard. Predicting the stock market is impossible. Predicting real estate is not hard, because real estate is supply and demand. We know how many houses we have. We know how many houses we are building. We know how many houses we're going to have. We know how many people are having babies. We know how many people live here. We know about how many people are moving here. We know how many houses we're going to need. We know how many houses we're going to have. We know almost everything that affects supply and demand. We don't know exactly what's going to happen to interest rates, but we even have some ideas about that. So it's just not that complicated to forecast the real estate market. So with that, I want to open it up to more questions. Did you guys learn a lot today? Yes. Yeah. What are we going to do, guys? What are you guys thinking? What questions do you have? Anything we talked about tonight? I really would like to answer some questions. Yeah?
Do you believe that a house to be flipped,
Yeah.
remodeled to be flipped,
Yeah.
has the same chance of getting the attention as a brand new construction builder house with all of the builder incentives that are out there right now?
Well, it depends, right? It depends on where you're competing. The builder houses are generally in the suburbs because that's where the land is to build tract homes. The better place to flip houses are in the city. So you're really not competing against the builder if you're selling a house in the city. If you're building a house next to a new house subdivision, then you're competing, and yeah, you got a problem. So, and people like new houses, whether it makes sense or not. So, yeah, I like flipping more in the inner city than in the suburbs.
And do you have the stats of, well, do you have, you say you have the heat maps?
Yeah.
So as an example, I'm new to this area, right?
Yeah, yeah.
So, Oak Cliff.
Here's the thing. In any neighborhood, remember I talked about months of inventory. That's an average, but the averages vary dramatically, okay? So one of the things that all the rookies miss is the inventory. They look at the price, they look at the comps, they look at the repairs, but the one piece of due diligence they miss is the inventory, right? So you got to understand inventory. And the realtors can confuse the situation. Realtors do not use inventory. Realtors use something called days on market, which is not the same thing as inventory. Days on market is a statistic that tells you how long it takes to sell a lucky house. Like you could have a subdivision with 10 houses for sale for a year, none sold, none of them sold. And then somebody puts house number 11 on the market, it sells in 2 weeks. If somebody asks a realtor, what is the inventory in this neighborhood, they're not even going to answer that question. They're going to answer a different question. They're going to say the average days on market for sold houses is 2 weeks. Yeah, that one lucky house that sold only took 2 weeks. What about the other 10 guys? They're toast. So I don't care how long it takes to sell a lucky house, days on market. I want to know how long it takes to sell an average house. That's inventory. So you got to know inventory, and you got to calculate the inventory before you flip a house. And some neighborhoods will surprise you. Sometimes you go into the suburbs, you go to resale houses in the suburbs, and you see the inventory is like 18 months or some crazy amount. So you need to understand inventory, right? Because if I'm going to be a seller, I want to be in a seller's market, so I better understand that. And I'll give you like an extreme but true example. I had a rookie bring me a deal, and it was like a ranch out in the middle of nowhere. There's a lot of that in Texas. You're going to see a lot of that in Texas. And they're like, oh, I got $1 million ranch for $500,000. Isn't that a great deal? Based on the numbers they understood, it was a great deal. But then I asked the question, what's the inventory? And they said, huh? Uh-oh, you never looked at the inventory, did you? So I helped them calculate the inventory on that ranch. Turns out there was 120 months of inventory. How long is 120 months? 10 years. Yep, you got yourself $1 million ranch for $500,000. What's the catch? It's going to take you 10 years to sell it. And you find some of that stuff in Texas. You go out in the sticks, you find stuff that has like years of inventory, especially land. So yeah, understand inventory. More questions, folks, more questions. Yeah.
Still trying to wrap my mind around the example you provided earlier about that female who
Yeah.
cash to buy a house.
Yeah. Yeah. What's the question?
So my question is, like, she has no cash. But
Yep.
she can make that offer, and then you're also saying that if she wanted to just tear the contract up, she can do that?
No, 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 no. I'm the buyer. The buyer can tear the contract up. The seller cannot, right? The buyer has a unilateral right to terminate the contract. The buyer does not. The buyer has an option period. The seller does not. So when you get a property under contract, the buyer has a period of time during which they can terminate. And this is in normal real estate. It gives the buyer time to do inspections, due diligence, whatever else they might want to do to determine whether they want to move forward or not. So that's normal for a buyer to have a right to terminate, but not the seller. If sellers could terminate, things would be in chaos, right? Sellers would just change their mind all the time.
So if you don't have the cash, why would you be signing a contract when you know you don't have that much?
Why do I need cash to get a property under contract?
Well, you don't, I guess.
You don't, exactly. So that's why I say you don't need any money to get a property under contract. You just need to know people with money. One of the strategies you could do is you get a property under contract. Maybe you find a distressed seller, their house is worth 100, and because they're a distressed seller, they agree to sell it to you for 70. That's about normal. Distressed houses sell at 70 cents on the dollar. You don't have any money, not even 70. You come to me and say, hey, Phil, give me 5,000 and I'll give you the contract. So I buy the contract. I've got the 70, so I'm going to buy the property for 70. I'm going to give you $5,000 for finding that deal for me. That's called a wholesale. You didn't need any money at all to do that. Does that make sense to you? Yeah. I mean, that's just one of the many examples, right? So I know it's thinking a little differently, but that's what we do as real estate investors. Yeah.
So basically what you're saying is you sell the contract to the investor who has the money.
Correct.
Okay.
It's technically called the equitable interest. If you have a property under contract, the contract itself has value because that contract, that piece of paper, gives you the right to do whatever the terms say. You can sell your rights to me or anybody else, right, for a fee. So you and I reach an agreement. I'll give you 3, 5, whatever the number is, 100,000, whatever the number is, and then the contract becomes my contract. I cross your name out as a buyer, write my name or my company's name in, and then I can buy the property with whatever terms are specified for the contract.
So that girl in particular was in the REIA.
Yeah,
Right?
she was sitting in your chair just like you.
Right, okay. And she basically went and found an investor from there.
So she got a property under contract for $265,000 from a seller that was distressed. When somebody needs to sell their house, you know, if you sell a house with a realtor, it takes a long time. Sometimes you want to sell your house in a day or a week. You can sell your house in a week, right, to avoid a foreclosure or any number of other things, but you're selling it cash, fast, as is, right? I could buy a house in a day for fast, cash, as is, but when you sell a house for cash, you get the cash value, which is typically about 70 cents on the dollar. It's like when you win the lottery, they give you options, right? You can get the whole amount, takes time, or you get the lump sum. We offer the lump sum, cash, today, fast, no loans, no inspections, as is, right? But it's 70 cents on the dollar. So she got a property under contract, I don't remember exactly the discount, but at like 60 or 70 cents on the dollar, and then she found somebody else, and she sold her contract for $17,000. Now the other investor had the $265,000, right? And she was another investor she met in the network. So we have like an online group where people say, who can loan me money, who wants to buy my deal, who wants to do whatever, and people horse trade. So she sold her contract to somebody else who bought the property because they had cash. That's it. Thank you. Yeah, question?
Just as a follow-up, you can't just cancel the tip. There's gotta be like a legit reason why it didn't pass a home inspection.
There is no reason required. In an option period, it's an unlimited option period. And this is traditional. So go hire a realtor and make a house, a retail house. Just go buy any house with any realtor on the MLS. When you get a property under contract, it's normal to have what's called an option period. Okay, a period of time during which you can rip it up. You don't have to give a reason, right? You don't have to say, I changed my mind because I didn't like something. You could say, you know, I had somebody terminate a contract because they didn't like the feng shui of the house. You don't have to give any reason. That's a true story, but you don't have to give any reason at all. The option period is unlimited, unconditional, right? Question?
Is it a Texas law?
No, every state that I know of has option periods, because when somebody gets a property under contract, it's normal to hire an inspector, do an inspection, do a survey, do an appraisal. That takes time. Sometimes you find something on the inspection report, you're like, I didn't want this, right? And you terminate the contract. And that is normal in normal real estate. Real estate investors use that time. We get longer option periods, and then we use that time to sell the contract, right? Sell our equitable interest. Question, yeah. You get it. Yeah.
So when you get it under contract, isn't there an earnest money to make sure?
So the earnest money is refundable. I'm going to tell you right now, people don't believe this, but I'm going to show you at the workshop, $10 earnest, $10 option. Okay, there are no realtors involved, there's no rules, it could be anything you want, it doesn't even have to be anything. Technically it could be zero. We do $10 earnest, $10 option. If a seller ever asks me, they don't even know what an option fee is, but if they ever ask me for more option fee, I'm going to say, I'm not going to pay you money to help you solve your problem, because that's what I'm here to do, help you solve your problem, but I'm not going to pay you to do that. So it's just a receipt of contract, that's all it is. It's called consideration exchanged at time of contract, that's all it is. What's that?
Then that's where you take it to the title company.
Take it to the title company, correct, and they collect all the money and disperse all the money. Verify that title's good and make sure it's all legal, right? And they have an attorney that makes sure it's legal, and I always tell people it's really hard to do something illegal with the help of an attorney. So if you close at a title company, they're not going to let you do something illegal. Okay.
So the title companies in your group
Yeah.
are work with investors, because a lot of title
Yeah.
companies are not.
Good question. So let me go on a little tangent for you. All title companies have on staff real estate attorneys. All independent real estate attorneys also sell title insurance. Title insurance is a commodity. It's the exact same price to the penny, no matter who you buy it for, anywhere in the state of Texas. Total commodity. Lawyers are not a commodity. There are specialists, there are generalists, okay? The attorneys that work for the title companies you've probably heard of, all the big name title companies, those are the generalists. They're not used to working with real estate investors. They don't even know some of the advanced strategies. The independent attorneys are the specialists. You work with the specialist as a real estate investor. So you're going to be working with attorneys that are also title companies, okay? And a lot of people say, oh, I know Independence Title or whatever title, and you know, they have generalists on staff. You know, and it's like specialist generalists. If you need neurosurgery, would you go to your family doctor and you say, hey, you went to med school, right? You're a doctor, right? Can you help me out with some neurosurgery? What would they say? No, you need a specialist, right? A neurosurgeon. Same thing with real estate. We work with specialists, right? Attorneys that specialize in working with real estate investors. Yeah, and the title is the same, it's commodity. Okay. More questions?
What's the turnaround time? Like for, does it have to do with when the bank is going to foreclose on the home?
So, you know, turnaround times for different strategies tend to be different amounts of times. If you're buying a pre-foreclosure, a house going to the auction, highly motivated seller sells cash discount. In Texas, the auction always occurs on the first Tuesday of the month, rain, shine, holiday or not, 21 days, exactly 3 weeks before the first Tuesday, the final list of all houses going to the auction is published at each county courthouse. So there's a 3-week period of time from the time their final posting to the time they foreclose. That's the sweet spot for buying their house. Now, little tangent, 3 weeks out from the auction, the sellers are motivated and ready to sell, correct? No. 2 weeks from the auction, they're motivated and ready to sell, correct? No. They wait till the last week. It doesn't make any sense. People in distress don't make any sense. They do irrational things like wait till the last moment. That deal I told you with the woman, she had equity in the house. She should have sold it 6 months ago, a year ago. She could have and would have and even made money selling it, but they all wait till the last possible minute, okay? And it doesn't make sense. It's not rational, but that's human nature, right? And at the last minute, there are very few options left. But the biggest and best option is often to either sell it subject to or sell it for cash at 70 cents on the dollar. Okay. Other questions? Yeah.
In lieu of reassigning the contract, do you ever sell the individual LLC that make it from the contract?
So that would be like, you could, but what are you thinking? Like a trust, or you're saying LLC, what are you thinking? You could do that for sure, but what are you thinking? Why would you do that?
To maybe decrease the liability?
How does it decrease the liability?
So it wouldn't show that you,
So
so
are you,
rather than showing that I turned around and sold the house, it would show I sold the company.
okay.
Things on it. Wholesalers are getting, it's a four-letter word in many circles, right?
So there's no law against wholesaling, okay? You can transfer your beneficial interest.
More risk in
But risk to who?
to us as the wholesaler.
What's the risk? I'm struggling here.
So let's say the person in distress sees a month from now you sold
Yeah.
the house and you need $20,000 and they're angry because they think they could have gotten more money for their house.
Maybe they could have gotten more money. So do you own a car? Would you sell me your car for $1? Well, what if you did sell your car to me for $1? I bought your car for $1. It was a arm's length transaction. You freely sold it. I freely bought it. I mean, can you come back and sue me and say, I really wanted more than $1 for my car? I mean, anytime anybody sells a house, they can say, I wish I got more. You know, people in hell want iced tea. But, I mean, so can you sell your company? Absolutely. But it's not, you know, where I'm struggling is the why. You know, I don't see a lot of people doing that. You know, when you get a property under contract and you wholesale, a lot of times we just sell our equitable interest. We sell the contract, and the buyer of the contract is not even me. So the buyer of the contract is somebody else. You know, and they're assuming the liability in exchange for the benefit, and I get a fee. And then sometimes if you're worried about like the seller saying, oh, you know, I could have gotten more for it, you can always do what's called a double close. You can buy it and then turn around and sell it the next day or the next hour to somebody else. If I buy your house for $100 and I sell it to somebody else for $150, is it any of your business what I resold it for? I don't think so. Do you think anybody would think it's any of your business, like what I resold a house for after I bought a house? So I'm not really worried about that kind of liability. There's lots of liabilities I worry about, but I'm not really worried about that because I don't see a lot of people getting sued or getting in trouble with that. So, but to answer your question, absolutely, if you want to, you can sell either a trust beneficial interest transfer, or you can sell an LLC that owns or has a property under contract. Yeah.
All right, guys, one more question and we need to wrap this meeting. So people stay going.
What's your opinion of the 50-year mortgage?
You know, and I say all for it. I know, I mean, there's a lot of people that hate it. And so what's the difference? 30-year mortgage, 50-year mortgage? I get it. So a 50-year mortgage would bring the equivalent interest rates down to what a 5% mortgage is today. And I say give people the option. I mean, it's just my opinion. You know, if somebody wants a 50-year mortgage, bless their heart. I mean, you know, you could say, oh, they're really not paying the mortgage down very much. It's going to take them 50 years to pay off the mortgage. Not really, because in my opinion, if you want to pay it off in 3 years, pay it off in 3 years. Sell it, do whatever you want. It just lowers your payment. Most people don't stay in a house for 50 years. Most people stay in a house for 5 or 10 years. So in 5 or 10 years, all it means is that you know, paid less interest. I'm sorry, you paid less payments for 5 or 10 years. You know, I would rather myself get a 50 years mortgage, even though I'm kind of a wealthy guy. I would get a 50-year mortgage, And if I wanted to pay it down faster, I would just take my money and stick it in a bank account and then pay the whole thing off whenever I'm ready to. So I don't have a problem with a 50-year mortgage. I think for certain situations, it's great. You know, guys like Dave Ramsey say, oh no, homeowners will take forever. Well, you know, 30 years is pretty long too. So yeah, give the market the product and let the market decide if it wants the product. That's my opinion. So.
All right, guys, I see a lot of people coming in with a lot of issues, a lot of books, a lot of questions, how to fix this. What I like to say, go create the problem, and then let the experts come in and fix the problem. So you can write down, get all the answers as you wish. The difference between the left brainers, who ask all those issues, I need to know all these answers. Then the right brainers go in and go cause the issues, and then let the left brain figure it out how to fix the issues. So those are the things that I like to do. When I came to this event not that long ago, even though it's been some years, I heard Phil Grove and his wife saying exactly the same thing that he's doing right now. You know the difference between me and them, the people that was in the classroom? I didn't ask many questions. I took the lead and I did door knocking. And I door knocked right here in Dallas and Houston and Austin, and I got 20 houses under contract. And I wholesale. I did a lot of fix and flip. I still keep a lot of buy and hold some.
Yeah.
Until today, I probably don't have all the answers, but I don't have to have all the answers. I just need
Yeah, and I think the point is you don't need to know everything. You need to know people that know everything. And the people that tend to get there faster are people that just take action of any kind. So yeah, you just go out and take any kind of action you can. Get a property under contract, even if you don't know what you do. And I remember, Olivia, when you got your first property under contract, you didn't fill out the contract completely correctly. In fact, it was like mostly blank, but you got a signature.
the feel being polite.
Yeah.
It was all blank.
Yeah.
The only thing that I remember,
Yeah.
the only thing I remember that he said is you're gonna know at the commercial at the 3-day workshop, you can put a housing contract on a napkin. I heard
But-
that like a
yeah.
signature and a date.
Yeah.
The name, the person's name.
And that's all you had. And it was enough, right? How much did you make on that contract?
$10,000.
It was your first $10,000, right? And, you know, you got it, you know, contracts are very often have mistakes. You know, 85% of contracts at title have errors in them, even though they're usually done by realtors who are trained experts. But the person, you know, that just takes action, even if they do it wrong, right, is much more likely to get money and to get progress than the person who plans and prepares and studies, you know, ready, aim, fire, right, which takes forever. So guys, we look forward to seeing you guys at the workshop. It's going to be very exciting. I'm going to teach you myself. We're going to get to know each other really well over those 3 days. If you haven't had a chance to talk to Chris and Nancy, strongly recommend you say hi and maybe have a little chat with them, because they're going to give you a little prep work for the workshop as well. And I'll see you guys in a couple weeks. Happy Thanksgiving, everybody. And don't eat too much turkey, and I'll see you guys here in a couple weeks. Thank you, thank you.